Welcome to the CFO Track podcast. I'm your host, Tom Hunter, and every week I'll be bringing you stories from some of Australia's best and brightest CFOs and the lessons they learnt along the way. My goal for the podcast is to provide learning and development opportunities for those wanting to get to the level of the guests on this show, but they just didn't have the access to those lessons otherwise. Let's get into it. On today's episode, I'm joined by Bryn Leggett, the founder of Hello CFO, a virtual CFO and accounting firm who specialise in VC-backed tech startups. Bryn gives really practical advice on what it takes to succeed as a finance leader in the startup space. And then after raising over $600 million worth of capital in the last 9 years, he walks through what to look out for and what to avoid. I hope you enjoy it, so here we go. This episode is brought to you by Tallystone.com, the all-in-one data room, capital register and board workflow in one continuous system of record. Check out the detail mid-episode. Bryn Leggett, welcome to the CFO Track podcast.
Thanks for having me, Tom. Pleasure to be here.
No worries. How's the week been? How's things?
Things are busy at the moment. We're getting close to 30 June when we're recording, so it's unsurprisingly a busy time for accountants and people in finance.
Nice. So does your life get busier than even in startup land, or is it just how it goes?
Yeah, it does. I mean, our business, we split across virtual CFO and tax compliance. So the CFO side tends to always be busy just for different reasons during the year, but compliance certainly has a ramp towards end of year. So there's things we're doing before end of year with planning and getting ready for compliance obligations. And then as soon as we tick over 30 June, it sort of goes full speed with end of year tax and some of the filings we need to do for our clients there. So yeah, nice. Pretty busy.
Yeah, very good. Well, I've given the listeners already a bit of an intro to you and your background, but I can never do it justice. So it'd be good to hear it from yourself, a bit of an overview of you at the minute, the business, that kind of thing.
Yeah, great. Well, so Bryn run a business called Hello CFO. So we're a virtual CFO and accounting and tax compliance practice based in Melbourne. We're predominantly supporting VC-backed tech startups in Australia, although a lot of our clients have a global footprint. So roughly 85% of our client base would be inside that sort of tech startup space. And most of our clients sit somewhere between the seed to sort of Series C, Series D at the most mature end. But the typical client would be a Series A stage startup who's got some institutional money behind them, good product market fit, and they're starting to scale. So that's where we focus. And my role splits across both parts of the business. So I lead the virtual CFO engagements and then have a team that works with me there. And then on the compliance side, it's the same sort of setup as well. So again, leading compliance, I'm perhaps not quite as active day to day there. We've got a great team working on the compliance side, but certainly wearing a couple of hats and then, virtual CFO for a number of great businesses.
No, sounds full on.
It is. It's a bit of a juggle, but, that's part of the territory and that's what we do. So, and I enjoy it. I love it. It's great fun.
Awesome. So we'll go back to the start and we'll come back in a second. But so what was it about finance? What was it about accounting? Like, what prompted you to get into the space?
Yeah, well, if I go all the way back, I actually started in professional services working with my dad. So I was enrolled to do a social science degree at uni straight after year 12. I really didn't know what I wanted to do, but that seemed like something that made sense and kind of aligned to my interests. But I actually got quite sick just as university was kicking off. So I had to defer at least the first semester. And so I got glandular fever back then. And so I got better maybe 2 months after the semester had kicked off, but it was way too late to go to uni. So my dad basically said, come and join me rather than sitting around at home doing nothing. So I joined him in his wealth management business. And that kind of got me into the professional services world. It wasn't accounting, but it was working in finance broadly. And that kind of gave me a taste for working, I guess, as a professional in a professional service capacity. So that kind of kickstarted, my thinking around what I wanted to do. And ultimately, I moved out of the social science degree and re-enrolled the next year to do business. And long story short, from there, I found the business side of things really interesting. And so that's kind of what, led to me moving down that path through, perhaps a few, different opportunities and things that sort of grabbed my attention along the way.
Yeah, no, so you didn't stay in the family business and rule the world
No,
that way?
no. Working with wealthy older people is interesting for some, but perhaps not for me. I mean, what really got me started on the path that I've gone down was while I was at uni, I started listening to this podcast from Stanford Uni called the
Okay.
Entrepreneurial Thought Leaders Series. And this was like 2006, something around then. So in the podcast world, that's a long time ago, nearly
Yeah.
20 years ago now. But there were businesses talking about their story of building products, growing, and how they sort of, took an idea, and a lot of these were Stanford students, but they'd sort of innovate something and then actually grow it into a business. And so listening to those stories just sort of captured my imagination and curiosity, and it sounded super interesting. And for me at that point, when I thought about business, I just thought about large established companies that are, selling things that you've seen forever. And this idea that there were fast growing businesses out there that were creating things actually captured my attention. And so I thought, well, that actually sounds super exciting. I'd love to be able to work with those kind of companies. So I sort of aimlessly went through my uni degree part-time working with my dad. So I was sort of doing that in parallel for about 5.5 years. And I got to the final 6 months of my degree and thought, well, it's probably time to actually work out what I want to do next. And all these podcasts I've been listening to had been, rattling around in my brain. So I thought, well, maybe I can go and work with these types of businesses. And something that they talked about all the time was VCs. So I thought, why don't I go work for a VC? But that was 2010 when I was looking into all of this. So every big name VC in Australia back then did not exist. So I got an interview with a little Melbourne VC firm called Starfish Ventures, and I originally chatted to them about a mat leave cover role. So it was really just to get a foot in the door and do something. And that didn't lead to an opportunity, but it did kind of push me to have a whole bunch of conversations with people. And, long story short, I got connected with Grant Thornton, which is where I ultimately started, and had a chat to their private clients team about what it looks like working with growing businesses. And they sold the dream of, we work with entrepreneurs and fast growing businesses and all of that. And so that's where I got a job. I sort of skipped the grad program. They had an opening and that led to an opportunity, but that's kind of what got me into the accounting world. So it wasn't really the fact that I was looking for an accounting job or even wanted to be an accountant. It was just that it gave me proximity to the people I wanted to work with. And so that was the way to do it. And it made sense to me. So, that really is what kicked me off in the accounting side.
Yeah, cool. Because you were with Grant Thornton for what, 7-ish years, right? 6.5.
Yeah, almost. My wife doesn't let it go that I didn't stay long enough to get my long service, but 6.5 years. So, yeah, it was
an accountant.
She's also an accountant. We met at Grant Thornton, and anyway, that's a very accountant thinking, but very financially sensible thinking. But by the time that 6.5 years rolled around, I was way too edgy to go and start Hello CFO. So 6 months of delay to get an extra 13 or 14 grand, kind of it wasn't a good trade off in my head, even though to her it definitely was.
No, fair enough. Well, it's a good stint though, because most stay in firms for 3 or 4 years. You must have enjoyed it.
I did enjoy it, but probably not for the typical reasons. So my time there, I would say I was very much the square peg in a round hole, in the sense that I didn't join because I did accounting at uni. I actually didn't study almost any accounting at uni, so I had no idea what I was doing when I turned up. But but what I did have was this desire to work with businesses and work more on the commercial side with them. So I was always agitating the partners and managers for opportunities to do, the interesting stuff, which was anything but doing traditional sets of accounts and financial statements and tax returns. So during that time, I got a lot of opportunities just by making a lot of noise and kind of being the person who was very eager to do other things. So while it was 6.5 years, in that time, I did my sort of core work in private clients, which was tax compliance and, accounting compliance, but equally I had great opportunities to work on a number of different areas. So I worked in valuations for a while, working with our partner who did forensic vals for matrimonial disputes and business disputes before the courts. So that was great to get, I guess, valuation understanding and sort of base level experience, and was very interesting. I had a couple of opportunities to be seconded out to clients. So one of them was a very fast growing business in the higher education space. And this was back when there was a government scheme called the Vet Fee Help Scheme, which, in some parallel to NDIS now, perhaps there was a lot of businesses that popped up offering, different services because there was government funding available for it. And so this was probably one of the largest in that space. So I joined them when their revenues were scaling rapidly. I think they were about 200 mil after a standing start 4 years ago. And I worked under their CFO, who used to be the CFO of Channel 7. So very, very high caliber individual. He also had his 2IC that came from Channel 7. And so they were running the finance function. And I joined them after they'd done a process exploring an IPO. And so I basically picked up the financial model from the investment bankers and sort of joined them in an FP&A role to really help them with doing a lot of modeling and scenario planning with the business to sort of understand some of the roll through of changes that were happening in the regulations around that sector and just business growth and help them with. They did a big debt fund. They acquired a business. In fact, they acquired a few, but one was about a $50 million deal. So there was a whole range of things that happened through that, which gave me really great FP&A experience. So even though, yes, I was still at Grant Thornton, that was 6 months where I was working with them. And then I came back to GT, finished up the secondment. And the one thing I've been agitating for was to get an opportunity to go to corporate finance. And so that finally came through as well. So I got a 6-month window up in the corporate finance team. So doing predominantly transaction services with a number of private deals. I think we worked on one public. So, you roll all of that together and it was a very wide array of experience that I got over that 6.5 years rather than a lot of my peers who were just kind of going up the hierarchy in a traditional sense within the division. So mine was a bit of a zigzag everywhere, but it kept my curiosity piqued and, certainly helped me build a broad array of skills, even though, it was no significant level of time in any one domain, perhaps except for the compliance side. But it was great. And working with a large firm like that afforded a really high quality opportunity to do that, which was good.
So you were saying before you made lots of noise, etc. How important do you think that was for actually getting those opportunities? Because they often don't just come to you. So do you think you would have gotten it otherwise?
Almost certainly not. I think I have this with people that I've mentored over the years, certainly when I was at GT and my team now. One of the things that I'm really big on is if you want opportunities, people are busy and people aren't necessarily sitting there spending their, spare moments thinking about you and your career. I mean, great managers do think about you, but at the same time, they can't mind read the opportunities that you want or the interest you've got. And I think it's incumbent on people to take their career into their own hands and, push for the things that you want. There's a sensible way you can do that. So you don't want to be obnoxious and also pushing for things that don't make sense in the business that you're in. But at the same time, you do need to be on the front foot and actually willing to speak up and ask for opportunities. And equally, opportunity comes when people know to be scanning for it, or if, an opportunity comes in and your manager sees that and they say, okay, I've, heard 3 times that, Jess wants to work on this type of opportunity. Well, guess who I'm going to think about when it comes up? It's going to be Jess because she raised it. Whereas if it just comes in and no one's made any noise, they're just going to go to someone who's going to get the job done. They've got a good quality of work and maybe they've got capacity to do it, but they're not necessarily thinking about the person who wants to do it the most. So I think there is a lot in that to, be not so much controlling your own destiny, but certainly being vocal about the things you want to do if you do have passion areas.
Yeah, for sure. I think a lot of, and I've heard this saying a lot before in the past, I don't know who actually said it, but no one's as invested in your career as you are. So you really do need 100%. To get yourself out there and put it forward. But no, it's good. It's good. So at what point were you starting to consider branching out and doing your own thing? When did it come up?
Yeah. So throughout Grant Thornton, I guess I was always wanting to do things that were interesting. Not all of it is, that's accounting. But, for the most part, if I was doing things that sort of captured my attention and energy, that was good. But, I had that thing of wanting to work with startups the whole way along. So that was something that was really interesting. The only thing was I didn't necessarily know where to go and do that. But I happened to meet a startup while I was at GT who were doing a program that we were running through GT with some business planning. And they weren't a typical GT client. They came in just to work on this program, which I was involved with. And so I approached the founders of that startup. They were a property management company called Cubby. And essentially their business model was providing a platform to landlords who want to manage a property themselves rather than using an agent. And so they built the tech and they had a degree of revenue, but I could tell that they weren't kind of the commercial guys and didn't have a finance background. And they'd sort of done some friends and family money, but they needed more capital to actually grow the business. So I hit them up and said, hey, why don't I come on board and actually help you outside my GT role, so out of hours on the weekends, and actually do some work around building the foundations for finance and helping you with capital raising, and do that in exchange for equity. And so through that, I got a great opportunity to work with them and really see what it's like. Just, the grind of a startup and how hard it is and how much, people are sort of just sticky taping things together and making it work, but, growing the business in the process. And then equally where that diverse background of finance skills can actually wrap around the business and really provide support to help them accelerate. And so through that, I built reporting. I built, a financial model, which actually had some sophistication to it and helped them with runway and those sorts of things. We raised a little under $1 million over maybe a year or two. And that experience really gave me the confidence that, there's a place where you can take those skills from the big end of town and apply it in a startup context. But B, it gave me perhaps the mode of doing that, which, then became something a little more structured. And so that was the catalyst to then open my eyes to saying, okay, maybe I can actually go and leave GT and go and start a business doing this and try and build that as an offering. And so that really was where the genesis of Hello CFO came from.
I know that to close a capital round, everything has to be spot on, but we've had our moments where we've had to scramble. The cap table is in a spreadsheet that might be right. The board resolutions are in a Dropbox that nobody's paying for and an email thread from 2022. And the data room, that was built on a Sunday night because the investor asked for it by Monday. We know better and we know how risky it is. Tallystone puts all of this in one place. AI-powered data rooms, capital register, board and shareholder workflows. One system that's always current, not just when an investor asks. I use it for story recruitment and it works like a dream to get set up. So make your job easier and de-risk the DD. It's the infrastructure that your corporate record should have had from day one. Start a free 30-day trial and get a live data room set up in 10 minutes. Use the promo code CFOTrack and find out more at tallystone.com. Let's get back to the show.
Yeah, no, and so because when you're in larger corporates, like you do get a little bit institutionalized, and then to go to start your own thing, like how personally, emotionally, what were you working through at the time to be able to do that?
One of the most interesting things about when I quit my job to go and do this was the reaction of the partners that I worked with. So there was probably 9 partners in my division that I worked in. And, I essentially I'd done my diligence on this idea of running a business. So I spent a couple of months, thinking through what could it look like? What would we offer as services? I did a very, very light business plan, which is, essentially like, this is who we'd go after. These are the services. This is what we'd need to do. But I didn't overthink it too much. But I'd worked with my dad and from a young age, I'd seen my dad run his own business. So he had a business with maybe a dozen to 15 people. And so the concept of running a business wasn't necessarily scary or foreign to me. It was actually quite familiar. And from working with him, that probably brought the barriers down of, that fear factor of actually starting something myself. And I kind of reconciled this, and my wife and I talked about it, and it was like, if it doesn't work, what's the worst thing? You go do it for 6 months and maybe it doesn't pan out, and then all of a sudden you go back and you get a job. So I'm sitting in the office with my partners, explaining to them, hey, I'm going to be finishing up. This is what I'm going to do. And a lot of them basically said it was a really gutsy move. And, a couple of them said they personally didn't think that they would have the guts to be able to go and do that, which to me, I found that really bizarre, because I'm thinking, well, you're way more experienced than me. You've got a decade or more on me as far as, time in the game and the experience that you've got. So you should be much better positioned to go and do this. But I perhaps didn't appreciate that there's a fear factor to stepping out and actually doing your own thing that perhaps was blocking other people to do it. But, I would say one common thread through my entire career is naivety as an asset. And so I've perhaps, operated from this perspective of, I like to think I can build skills quickly. I'm curious, I can learn and adapt. But equally, I go into a lot of things, and perhaps I've sharpened that over the years, but certainly early days, just super naive. Like, I did not know what I was actually going into and doing. But because of that, I didn't dwell too much on the downside. I sort of was mostly optimistic. I would sort of look at what was in front of me and say, okay, I've got the skills and the ingredients that are probably going to allow this to succeed, even if I don't know exactly how. But then I would sort of be willing to take the plunge. And, I guess what's happened has come from that. Whereas the opposite could be I'd sit there and overanalyze and think about it too hard and think about all the reasons it might not work, or, just do reasonable levels of diligence. And then you'd say, okay, well, there's all these risk factors you've got to protect for. Whereas again, naivety is an asset. I perhaps just didn't think too hard on those things. And I was like, no, I'll just go with the glass half full attitude and work it out. And, that's proven to have worked fairly well. So, it was an interesting journey, but it definitely was a, surprising set of conversations that I had when I pulled the pin and decided to start.
Yeah, for sure. What was that personal family life like at the time? Did you have kids at the time or anything like that?
Yeah. Again, naivety is an asset. So we had a 6-month-old. We'd moved into our own place. So we bought a place about a year earlier. And my wife was on mat leave. So, there's no better time to take the plunge and start your own business with. And I had no clients really. I had like 1.5 clients with about 10 grand of revenue. That was it. So it really was taking the plunge. And, maybe all the partners at GT were just looking at my circumstance and saying, well, you're actually a bit nuts. But, that was the family backdrop. But again, it just meant, you've got the pressure behind you to make something happen. So, it was, I just didn't think too hard about it. Like, I was very aware, obviously, but it's just kind of like, let's jump in and do it. And, that was what I needed.
What was day one like?
Day one is very, very ordinary. I had a desk in my dad's office, so I'd subleased some space off him, which made sense. So I rocked up with my laptop, keyboard, a monitor. I think I brought that in on the weekend, actually. And so day one was just literally, sitting down, probably just working out systems and those sorts of things, getting email accounts. I remember I had to, kind of get like a V1.0 branding and website and all of that done. And then just teeing up coffees with people, essentially got no clients. So it's like, need to get out there and meet some people. So, that was a huge part of it. Yeah.
And what was the fractional VCFO space like at the time? Because now it's everywhere, but then it wouldn't. What was that, like 2015, 16?
Yeah, so we just hit 9 years last Friday. So 2017. Thank you. Back then, as a concept, fractional would have existed, but not in the way that you could say it today in finance circles or even among founders and actually have people understand that. It was very nascent. It wasn't named, and it was mostly just people acting as contractors, where they might have a few different businesses they work with. So as a model, not very well understood. And even for myself, it wasn't like I could look at other businesses or people out there doing what I was thinking about and sort of, be able to emulate that. So it was a lot of kind of working it out as you go, working out the model. I was very fortunate I did have the Cubby experience because that gave me a flavor for how you could structure it. But, as with lots of things, you just have to dive in and, you try things, you work out the parts that work, you make some, wrong moves, you sell a package or a promise that doesn't actually make any commercial sense, and you kind of recalibrate from that. But that was really how it was. It wasn't this big structured thing like you could look at today.
Yeah, no. And so how long in did you start to feel that you'd made the right call and start to get a bit of momentum? Like, when was that?
First 6 months, I would say.
Nice.
We won a couple of clients. I got my first VC-backed tech startup on board within maybe 3 months, which is a business called XY Sense, who'd just taken some money from Blackbird as a seed round. And I think after 6 months, we'd picked up a few clients and started sort of operating in that VCFO role. And already I could see there's value here. It does make sense as an offering. And for me, it was just so personally rewarding actually being at the coalface with these founders. Like, it was, I can't understate how exciting it was to go from a large structured firm like Grant Thornton or any big firm where the way you work with your clients is fairly imposed on you, to literally just going down to the office and sitting alongside the founders and working through challenges with them and building models and, really getting stuck into it. And it was just so much fun that, there was no question. It was sort of like immediately I was hooked. It just, made so much sense. And it was just great to be able to do something that sort of had in my head as an idea about working with these businesses. And it's like, I'm actually doing it. And it's great fun. So, there was no regrets at all.
Yeah. And so you were working with XY Sense for 5-ish years or something. So how did the work change? Like, what was the complexity like early days versus towards the back end?
Yeah, XY were a great business to work with. They've got, so a couple of things. The founders there had been involved with another business that they'd founded and sold previously. So these were second-time founders. Also just very switched on people. So incredibly smart and humble people, which was great to, have as a first client that I really dived into in the VCFO role. For me, that opportunity was awesome because it was the first exposure to VCs. I'd sort of, again, listened to them on podcasts, but, it was my first real world experience of a fund that's put money in. And, they had a director from Blackbird, Nick, who was very active as a board member with the team there. So there was some great exposure that I had working with that team. They set up as a Delaware C Corp from day one. So it meant, very fortuitously, I got to have exposure to cross-border structures and complexities from a very early stage in the business. So not only were we managing just growing a startup out of Australia, but we also had US tax and legals and compliance that we needed to deal with cross-border issues like transfer pricing, and raising money out of the US as well. So it was...
Were you needing to lead that yourself, or did you have an internal team supporting you with all that?
No, so I led the finance role for the 3 to 4 years, 4 and a bit years, I think it was, as the VCFO. And then a big part of the VCFO role is you're really sitting in the center and you're sort of coordinating all of the things that happen around you. So, if it's US, particularly from US accounting standpoint, managing US accountants and compliance filings and tax payments and all those sorts of things, we were doing the Australian side from our end as Hello CFOs. So, our tax practice was managing that side of things. But very much in the center of all of that. And then, a lot of it is learning, as it always is. So, I didn't know a whole heap about, transfer pricing and cross-border and all those sorts of things, but you dive in the deep end and you work with great people and you sort of build the skills. And that was kind of how that worked.
Yeah, nice. And then so that was going pretty well. And then I think you'd started with Nira not too long after, or around the same time.
Yeah, so Nira we started working with, I think it was early 2021 from memory. So between starting with XiSense and 2021, we'd obviously by that stage worked with a whole bunch of different startups. It started to refine our business model. We'd hired teams, so we had a number of people working the VCFO side, a number of people on the compliance side. And I'd say our model was a lot more established at that point. But Nira was a business we got involved with just after their Series A. So they raised, I think it was about $7.5 million in VC money at that point. So I think Square Peg and Skip had been involved in that round. And again, they were an incredibly switched on, probably the highest caliber team I've ever worked with as far as just commercial smarts, the ability to get things done, and also being a very, very high performing but humble culture. And so, when I got involved with them, essentially they'd had a bookkeeper up to that point, and the team internally had been managing the finances, but it was at a very rudimentary point. So it gave a great opportunity for us to step in and do a lot of the sort of baseline housekeeping aspects around building good bookkeeping processes, standing up reporting, building a robust financial forecast. And then, working with them, we started to mature the finance function as they were growing. And so over that journey, we were involved with them in the VCFO role. I think it would have been about 4 years.
Wow.
And so they went from being an Australian business to having genuine sort of broad global scale. So they set up in a subsidiary in the US. We set up a subsidiary in the UK. We did an acqui-hire of a business in Lithuania, of all places. So, acquired and then had to deal with all the legal and tax-related aspects of Lithuanian compliance. But they sort of expanded a global footprint, and also just from a customer side, they were growing incredibly quickly. So, that gave us the opportunity to keep leveling up with them. And really, it was our opportunity to lose, in the sense of, we were doing good work, but it was a question of when would we cap out? Are they going to outgrow us? Are we not going to be able to keep leveling up in the sophistication of what we're doing? But again, as a great team, they gave us all the latitude we needed and sort of over-indexed on bringing us into conversations and exposure in the business to give us every chance of succeeding. So, we went through with them all the way up to Series C as the VCFO team. And through that, we went through a B round, a B extension, a C. So they raised about $97 million over the 3 rounds we were involved with. The Series C brought on global private equity funds. So there was, intense due diligence run by A&M. So, very deep tax, financial, operational DD that happened there. But it was, a great set of opportunities and experience that allowed us to really, go to new heights as far as our business, working with our clients, and, super grateful for that opportunity from Dan and Jack and Karam and the team there.
Nice. So you were saying before that they were one of the highest caliber teams that you worked with early days. What was it specifically about their approach or traits or personalities that made them so high performing?
Yeah, I mean, first of all, just individually, the founding team. So you've got, there was Dan as the original founder, very much a deep technical individual. So he's great on product, but they hired excellent people around them. So Jack, who was the person that we worked predominantly with, he'd run I think it was like a $500 million portfolio in solar previously. So these weren't sort of first-time founders with no experience behind them. They all came from really strong backgrounds in different domains. And so it meant that, perhaps uniquely compared to some of the other clients we work with, they were very familiar with what it looks like running a very high-performing business at a larger point. But they were also very adaptable in not just applying sort of corporate ways to a startup. They were very agile, but it meant that they knew what they needed to be working towards. And so everything that they did, as far as the people they brought around them, the evolution of how the business and reporting and finance and strategy worked, was continually sharpening, but not just working it out as you go. It was very much, I almost look at it as they steered us to a certain extent to say, here's what we need. We're not guessing what we need. We know what we need, and sort of breadcrumbed some of that to us. And then it was up to us to actually go and execute on that to a high enough standard that, molded into the culture that they had. So, they were very, very high performing individuals as a team. They had a very effective culture. And through the VCFO role, we see lots of businesses and lots of cultures, and we see great ones and, less functional cultures. But certainly Nira had, one of the best cultures that we've ever worked with. And it meant they gave everyone in their team the opportunity to succeed and do their best work. And so, to us, we couldn't have asked for anything more. And then, to also be doing that with a business that went on to such success is, great experience for us.
Quick one before we get back to it. If you're listening to this podcast, you probably already know that I recruit for senior finance professionals for high growth businesses. That's what I do outside of this show. My approach is built around storytelling. When I take on a search, I build a narrative around the business, who they are, what they're building, where they're going, and why that role matters. Before I reach out to a single candidate, I tell that story across multiple channels to my network of over 28,000 finance professionals in Australia, so that when I do start conversations, candidates already know who you are and there's a level of buy-in before I even contact them. So if you're a founder, CEO, or CFO that's thinking about a finance hire, even if it's early days, I'm always happy to chat. Whether that's a question, some free advice, or a sense check on what the market looks like. You can find me on LinkedIn or at storyrecruitment.com.au. All right, let's get back into it.
Yeah, no, well, I guess the proof is in it from where they are now, right? Brisbane,
Absolutely.
All that. But so did you say 97 million raised with them, and then for a total across the whole portfolio, how much have you raised in the 9 years?
Yeah, so as of, I think, maybe a month or two ago, it just clicked over 600 million among our clients. So it's a huge amount of capital that our clients have raised. So, we sort of do track it, and it's a, up and to the right kind of curve. COVID, certainly early 2021, there was a massive year, and then it dipped down. I think it dropped by like 75% in 2022. But in some senses, our business is almost like a VC fund in that, we're 9 years old now. A VC fund typically runs for 10 to 12, depending on the fund. But, you would sort of have like early stage startups. So you'd have all your seed investments early on, which is a lot of the clients. That's where we were meeting them. And then you'll have a portfolio approach where some will be the breakout success, successful businesses. Some will sort of plateau, some will flame out and die. And we've certainly seen that. So, if we looked at our clients, they've gone on to more mature rounds. They've raised larger capital as years have gone on. And particularly now, we're seeing 20, 30, $40 million rounds happening among multiple clients every year at the moment. And that's really just a function of working with those more mature, Series B, Series C stage startups. And it makes it super interesting. It's great exposure for us. But it's really just an evolution of the business model and sort of where we've grown to with our clients.
And so from those different stages, so pre-seed, seed through to Series C, D, or whatever you've been involved with, how does the process for raising capital change across each of them?
I mean, seed rounds, even to Series A, we find a lot of those are VC-led rounds, obviously. And it tends to be mostly backing some traction, the founding team, and really fundamentally, does it make sense that a VC wants to be backing those businesses? I would say, generally speaking, VCs do very, very light diligence. So it's more around making sure that overall the opportunity makes sense, the team is credible, they've got some good traction that you can validate against, and you believe in the space. As the business then matures on, particularly once you get to a B and beyond, we start to see there's a lot more rigor in the investment process. So the expectation that you've been trading for a number of years at that point, you've got historical data behind you, not so much just the promise of the future and a model, but it's actually backed by several years of hard data as far as financials, customer data. If you're selling subscriptions or SaaS, there's data at an individual customer level and customer behaviors, and that starts to get scrutinized a lot more. And so we find that once you go into those more mature rounds, there's a much larger component of due diligence. And then if you go and raise not just from typical VC, but actually from private equity, as an example, the scope of diligence expands drastically more. So you end up doing diligence processes that look more like an M&A process as opposed to an early stage VC round. But, at a core level, it's still a very similar process in that you take the business to market, you're pitching that, you're trying to get a bunch of term sheets together and then work out who's the best partners you want around the table. It's just that, the sort of level of scrutiny, and particularly between term sheet to close, you can expect a lot more work to happen once you get to those later rounds.
Yeah, okay. Are there any classic challenges or mistakes that you see at those early stage when businesses are trying to raise capital?
I mean, the biggest thing that I've seen serve businesses well is where you've got the house in order. And I think just having everything clean before you go to do a raise is the most important thing. So having clean sets of financials, all your data is organized. You don't need to go and do a big, clean of the house halfway through a raise because your legals are all over the place. You don't know what your tax structures are. You've got a whole bunch of like half-baked issues within the business that haven't been fully tied off. All of those things slow down cap raise processes. And to the extent you can have all of that really well organized before you go into a raise, that's really important. We've seen it where, again, Nira as an example, their private equity rounds, even though we had a very intense due diligence with A&M on behalf of the PE investors, everything was very tight. And so it meant that they send you the RFI lists for DD and you sort of already know all your data's clean. There's no conflicts where they're going to look at one source of data and go and compare that to something else and it doesn't marry. So it meant you can run very fast and actually progress through that pretty quickly. And from your investor standpoint, that gives you a lot of confidence because not only are they not uncovering skeletons, but actually it's representative of the fact that you run a really tight ship, and therefore not just when it comes to finances, but when it comes to customers and accelerating, that's reflective of the culture you're running. I'll contrast that, a client we did a project for last year, I actually got a reach out on LinkedIn from an international VC saying, hey, we signed a term sheet with an Aussie startup there. So we've kind of agreed the terms, but they don't have a financial model and they don't have accrual accounts. And so this was a early stage startup who'd grown incredibly quickly, but hadn't got any of that housekeeping in order. And so long story short, the VC kind of put us forward to help them with that. We got involved and then, you sort of peel the onion a bit and you realize you've misrepresented ARR because you've made some very basic errors like, conflated GST as part of your ARR figure. You've got, issues with margins. If you do your accrual accounts, it actually looks very different. And so, for them, we were sort of helping do that housekeeping midway through their raise. It obviously wasn't an existing client of ours. We would want that to all be done before we got there, but it actually jeopardized the raise process and that lead investor pulled out. So,
really? Okay, wow.
You can do yourself a disservice by not having these things organized. And I think for people in finance, one of the things that's really important is founders will often be very edgy to just run at the opportunity. And it might be that, they're having investor conversations and it sounds great. And investors are like, great, let's go to DD, share materials. We want to give you a term sheet. But if you know that the housekeeping is not in order, then you need to have a voice to actually express that and make sure that the founders understand that, because it might all sound rosy and optimistic for them, but it will fall apart if things aren't organized. So, finance has a really important role to play in that with the founding team as you're going into that cap raise process.
Yeah, well, I suppose it's going to get found out eventually if it's not in order, right?
Absolutely, yeah.
And so capital is obviously a big part of it, but from a finance perspective, what do you think are the big levers that they can pull for growth and expansion and all that kind of thing for early stage or high growth?
Yeah, look, I think finance has a really important role with startups. And I think for finance leaders, there's huge scope for them to have a big voice with the business. And we've certainly seen that to the extent you can contribute across the broad spectrum of areas in a business, a startup is not set up to have, an FP&A person, a compliance and reporting person, a treasury person. That you just don't get that in early stage. And so for anyone who's a finance leader in early stage startups, you need to have a diversity of skills there yourself. And so I'll say that one of the most important things is building a multidimensional skill set around the different functions that the business needs. And I know because our clients hire in, maybe it's a VCFO client who succeeded and they then hire in a financial controller or a CFO. often people will come from a background that has a skew towards one particular area of finance. So you might have a background that's more compliance and reporting, or you may have been more FP&A, but you're light on tax. What I think finance leaders would do really well from their own personal development is actually trying to look at the areas they're not so strong in and get exposure or actively work to gap fill those spaces, because you are going to need to have those skills to actually advise the business you're working in. And I think with that, once you have that array of skills, it gives you greater voice into the direction and growth of the business, because you don't want to be the person that sort of sits back and just does your job and, make sure the books are closed, the forecast actual reporting gets done, but actually you want to be advising the business on the key commercial drivers that impact growth and strategy. And so you need to be prepared to talk up and actually be invested in the success of the business, understand the market, the product, customer behaviors, how they buy, and then add your unique angle, which is from that finance side, to really contribute to the overall formation of strategy and the direction the business goes in. And I think where you can do that, it's a really core strength for that business overall. And so, finance leaders then developing your skills and the confidence to actually, talk in the team and the executive at a business level, I think that's critically important.
Do you think that specific element, the breadth of skill set, is the biggest difference between good and great within finance at a startup, in the startup space?
I'd say it's a really core element to it, but it's not the only one. I think, you can be very skilled, but you can be, as I said before, someone who sits back and kind of does your job, but you're not actually really pushing forward. And, I know this as someone running my own business, but equally working with teams where you've got the people that are really curious, they're, solution oriented, they're trying to look at the array of problems, they're thinking outside their domain, but then trying to contribute and help move things forward. That really is where you add value in a business. And I think, that as a skill, some people will be naturally more curious. Others might be wanting to be more confident in the domain that they're very experienced in, but not necessarily lead in others where they're perhaps not as confident. Yep. But I think that really is what distinguishes finance leaders and sets them apart. And to be successful in a startup, I think it is really important that you can, lean into things and you almost have to look at it as every 18 months, the business is going to step to a new level, ideally, if they're growing. And therefore, your skills need to keep evolving and matching the pace of growth. And if you've got that curiosity and high caliber in what you do, it lends you to being relevant and useful and value adding through the journey of a business. Whereas the risk is if the business is growing quickly and you aren't necessarily keeping pace and evolving as an individual, then you're going to get left behind and your skills will be relevant for a season of the business's life, but not necessarily for the evolutions it's going to go through.
So that's hard because some of these businesses really do grow exponentially and it's hard for a human to do that, right? So it's not easy.
100%. And I think one of the really humble aspects is also knowing when to put your hand up and say, I think any finance person working in a high growth environment will know that tension between high growth and the challenge that you're being offered, in the sense of I can keep leveling up, I can keep growing in my own role. But then there becomes this friction point where it's fundamentally you can't keep going. The pace of growth, the skills needed, the types of conversations that are happening at a leadership or a board level, those are too far beyond where you're at. And I think you've got to have that self-reflection and humility to also be able to then flag to whoever you're reporting up to say, hey, I can work in this space, but I need support, or I think the business actually needs someone more experienced to come in. And sometimes that to, the person you report up to, that's what they want to hear. They don't want you sort of, trying to hold all the toys and not let anyone else play. But, if you have that self-awareness to say, actually, it's in the business's best interest to bring somebody on board, because we're going to hit increasing levels of frustration and friction if we can't, make this an effective mode of working, then great, come and help them flag that early. They're going to take more voice from you because you know it firsthand. And therefore, maybe a senior finance leader goes onto the hiring roadmap, whereas they thought maybe there was another 18 months until they needed to do that. So, that humility and self-awareness, I think, is really critical as well.
Yeah, nice. So from a Hello CFO perspective, how's things going at the minute? What does the next few years look like for yourselves?
Yeah, I mean, for us, we're doing a lot of work in the international space. So we've got probably almost the majority of our clients now have some sort of international aspect to their business. So we've got a lot of businesses we support who have got foreign structures where they might have US headcos or international subsidiaries. So I can only see that continuing to accelerate. We're seeing huge growth with AI and AI-related products and the ability to sell quickly across borders. And so I can just see that continuing to ramp for us. As our clients continue to grow, it just means we, equally need to ramp our business as well. So, we're at the point where we need to be hiring on both fronts of our business to keep pace and make sure that we can, keep up our promise to our clients, which is, their needs increase and therefore, there's more demand on our team. So we want to be able to do that. And I think AI is just going to be a really interesting one in the sense of it's transformative for business models and our clients selling products and building products. It's throwing up new challenges as far as the economics of a traditional SaaS business, which was very predictable, now to AI businesses where we're seeing margins move all over the place. And to a degree, there's an unknown around how those businesses should be pricing in some circumstances. So it's a really dynamic challenge for us advising them. And then internally for us, there's opportunities for AI to be improving and driving efficiency around how we do the things that we do day to day for our clients as well. So, they're probably the big things that, rattle around in my head at the moment as far as, the future, but they're all pretty exciting challenges.
Yeah, nice. Well, I think that's probably a great time to finish up, Bryn, but you've been brilliant. I think me especially, I've really enjoyed hearing about the high growth space and the challenges that finance work through, and I think a lot of the listeners would agree. So if anyone has any questions or they're keen on joining Hello CFO, what's the process for that? Should they reach out directly, the website, LinkedIn? How should they do it?
Yeah, best place is LinkedIn. Very active there. So yeah, feel free to drop me an invite and a DM, and happy to connect there. And yeah, we're always super interested to connect with smart people in the finance space that are, passionate about the clients that we work with. So love to hear from anybody. And really appreciate the opportunity. It's been great to chat.
Nice. And if is there a particular profile or particular background that you like to hire from, if anyone's considering it?
Hungry, high caliber individuals. There is no, we've seen it time and time again, there is no uniform background that makes somebody well suited to succeed. It's people who've got a high bar for their own quality. They're curious. They want to learn. They actually care about what they're doing. That is definitely, ingredients to success. Obviously having some background in finance, whether it's internal, it's been with a professional services firm, that's helpful. But, equally, we've just seen people who haven't had that background learn and do really well. So yeah, we're happy to hear from smart people.
Perfect. Well, thanks again for coming on the show.
Thanks, Tom. It's been great. Appreciate it.
Thanks for listening to the CFO Track. If you enjoyed the show, don't forget to like, subscribe, and share with a friend. I'll see you next time.